Hi guys, what's up? How you doing? Nice day today. It's Saturday. Time for some sushi, yeah? So today we're gonna do a sushi swap instead of a Uniswap, because let's be honest, Sushiswap got a lot better name. So we're gonna do tech analysis and it's looking good. I can tell you right now, it's looking good. So let's check it out. Okay, so we're gonna start with the big time frames and go to the small time frames, and we're gonna show you on the way what is actually good with the Sushiswap right now, and is actually the party over? Is the party over? I know a lot of people wanna think like it just went up a lot. Is the party over? And I'm here to say no, the party is just getting started. Okay, the party is just getting started. Okay, look at this now. The first of all, this is monthly candles for the Sushiswap, and you can't get anything out of this. So we gotta go to the weekly, and even the weekly candles, like you can see, only the volume is going down, and the price, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 candles, red candles in a row, and it got nice like downward momentum, like it's running. So basically what we can see that people were selling a lot here. A big dump came. I'm gonna show you the dump, and then it's starting going slowly upwards, and I think that's the reversal. So that's the most you can get from the weekly right now. There are no moving averages or anything like that. So let's go to the daily. Even the daily is pretty terrible to watch for. There's something like RSI and MACD are not yet, don't have enough data yet to be useful for us on the daily. But what we can see here on the moving averages, it got above the 20 and the 50 moving average on daily, which is actually bullish. So keep that in account, because all the way during the bleeding it was keeping below the 20 moving average, and now it's above both 20 and 50, and as long as that stays, we're all good. But we have to go further down to the 4 hourly to actually get some meaningful data, both from the averages, the MACD, the RSI, and the volume. So as you can see, we got some data on the MACD, we got some data on the RSI, we got our moving average, even the 200 moving averages is up. So we're gonna do our tech analysis from here, from the 4 hourly, because let's be honest, there is not much history to this data, and that's what we're gonna talk about. So what's actually happening? Well, the sell-off is a sell-off, and here it came. You see this big spike on the volume. That's the big sell-off. It went during some kind of bottom here. Let's put it down here. It had some kind of bottom here, right? Some kind of triangle it was keeping. Let's do it like this. It had some kind of bottom, some triangle, and once it broke down, like people start selling like crazy. It just went, and then people started buying again after the dip, right? Buy the dip and all the shebang. And what happened here is we got a new support down here on the bottom here, right? So it went a little bit up and started. Let's turn off the moving average. We're not going to talk about moving average quite yet. And it got came back up again, and the sell-off kind of continued all the way down to the some kind of bottom here, right? It finds some kind of support, and once it broke the support, it went down, but there was no volume on this crash over here. There was no volume on this crash here. There was big volume here. You can see here big volume, but on this crash over here, big volume. On this crash over here, almost no volume. So what I am taking out from this is that people that weekends sold over here, and here there were no more weekends, no more people to sell. So now people, it was the bottom. There are no more people to sell. Everybody see the volume. Even though it dropped, the volume just like stayed the same, trading volume. And that to me says like bottom, bottom. It's not gonna go up, and I think a lot of people notice this as well and started buying up. So that's the first step. We have some kind of bottom based on the volume and on these two drops, right? There was also this triangle here, of course. Like you had two triangles, right? first triangle down, second triangle down, and now it broke up above the triangle, and we are expecting this next resistance is now at what's this? The next resistance right now it's at 1.2. Yeah, let me get this 1.2. Okay, 1.199, 1.2. Yeah, so next resistance is 1.2, and that's the big resistance because it was support here before it dumped. It broke already this top over here. This top over here, see it testing is as support. This was a previous resistance. It broke through the resistance. Now it testing as support, and the next job is to test 1.2 as support. And how much up there is? That's 35%. So you got 35% upside on the downside. I'll tell you on the downside what am I thinking for the downside. Now, if we just look at the price chart, it went up because all the way here it got lower highs. This was a higher high, tried to get up, couldn't, then lower high, and started going again. But here it made a higher high, and then a higher high, and then even a higher high. So 3 times it made higher high. 1, 2, 3, right? And also it had this bottom, and then it made a double bottom here. We can say it was low. This is second time it made a higher low, and now it's trying to make a third a lower higher low, right? So we don't want this price to go below this this line over here, and that's at, let's put the price on that as well, 0.64. So we don't want price go below 0.64 because if it does that, it's gonna make a lower low, and that's bearish. But as long as it keeps making higher low, anything above this price and this price now and the support over here, it's actually bullish. So it doesn't matter how much it retraces, because everything has some kind of correction, retracement and stuff like that. As long as it stays in this space over here, we are actually bullish, and our target is 1.2. Okay, the target is 1.2. So that's the meme lines, and that's the price targets. So now let's look at some moving averages. The moving averages are really nice because let's remove all the lines. Moving averages are really nice. As you can see here, all the way from the top, like it was holding below the 20 moving average. It was trying to break it a couple of times and couldn't. And here the total change on the moving averages came. It broke through the 20, the 50, the 100 even, and then got rejected on the 200 moving average. You see this this is, let me zoom in for you. This here, this is engulfing a bearish candle. It tried to break the 200 moving average, couldn't break 200 moving average, got rejected hard, and then of course what happens then, it tried to reject break it second time, couldn't, and this is third time it tried to break it, and he actually broke it. Once it broke it the third time, the 200 moving average, the 200 moving average is the purple one, then it got tested the 200 moving average and continue climbing on the 20 moving average up here. There is a triangle here, I think, somewhere, because this is usually how triangles are formed. Something like this, maybe, depends on how you draw it. See, this was some kind of triangle. I know I drew it right through the bearish engulfing candle. But these candles, this is a tip for you in your trading. When you see these kind of candles, just disregard and remove them from the chart. Like, just erase them. If there was an eraser, you could just erase these candles. Don't look at them, okay? These are things that happen that should not be happened. That's when price goes above somewhere where it goes, and everybody just buys it back down again. So you don't want to look at these candles. They're just they're just something I like noticed. I don't know if this is correct. I don't see anybody talking about it, but I never like do these triangles like this and try to use the tops of the bearish engulfing and stuff like that. I always try to find some other wicks beside them that I can use stops. So that was some kind of triangle. It broke out the triangle. Like we see, the triangle was the reason, because we went all the way up to the 200, went back down to the 50, then we broke it up with the did we broke it on the, yeah, we broke it on the volume. See, on the volume we broke it the higher high, we made a higher high. That's really bullish, and now it's continuing going up. So what's gonna happen now? So now we have confirmed this is actually a decent, we have confirmed that this is actually a real breakout. It's real breakout. It totally changed the trend of the price. Before it was bearish, now it's either gonna be sideways. Wait, it's either gonna be sideways or it's gonna be upward trends, and I think it's gonna be uptrend more than the sideways trend. So what's gonna happen now? We're still gonna look at the moving averages and how the moving averages climbs are used for the price to climb higher. So what's gonna happen? The 20, the 50, the 100 and the 200 are gonna go next to each other, and the price is gonna go touch the 200, bounce up, then touch again 200 and bounce out. And then when the rubber band or resistance or whatever we're gonna start to getting too high, it's gonna go down to the 50 maybe and try to break it again, and maybe then the 100, 200 before it comes into some kind of triangle, before it's either breaks on upside or downside. Okay, that was really terrible drawing, but anyways, what you want to look at now, now is the correction time, because we jumped up how many percent? We jumped up, let me see this, around 100%, exactly 100% actually, exactly 100%. What's that? Yeah, from close to close, 102%. So 100%, we jumped up 100% since 5th of November. That's like in 10 days, 100%. That's nice. That's very nice. So 100%, you got a correction, but correction is not, I'm telling you, correction is not gonna be like bleeding. This is not over. This is just getting started. It's just getting started. So watch for the you want to buy on the red line, the 20 moving average. So go to the 4 hourly. You do your trades, I do my trades and all of that, not financial advice, but you want to buy on either the red or the green. I want to buy either on red or the yellow line, the 20 or the 50 moving average, because price is gonna hit one of these two lines. It depends on how this pans out. There is not much history to this this token, so we have to see how it plays out. But I would say that anywhere above 0.64, 0.63, right, the higher lower up here, anything above this price over here, wait, let me draw it for you, anything above 0.63, 0.64 is a good buy. It's good buy. You don't want the price to go below this line, and you want it to make a reverse somewhere over here, and the next time you want it to make a higher high. Okay, and as we saw earlier, our price target right now is 1.2. Yeah, because it was used as big kahuna, big support line previously that got broken, and all the sell-off happened on this line. So breaking this line, this is gonna be hard resistance to break. I think we might actually hit it and try it a few times before we actually break it, or we can just pass right through it if you are going upwards. But the line is the line to be watched for. The lines, the lines. Okay, guys, that was the Sushi token. This was first time I did Sushi. I might do it again because I'm interested in where this is going, if I'm correct or not. So do subscribe to my channel if you want to see where this is going. If you like the video, like the video. Thanks for watching. I make video dailies, so stick around, man, stick around. We're gonna do, tomorrow is Bitcoin Sunday service. If you don't know what that is, it's the one day in the week where we look at the Bitcoin, what has happened, what's gonna happen, and that's about it. Thanks for watching.